Welcome everybody. In this video we're doing a deep dive into stock charting. This is our conventional chart, and let me be straight with you on this one. If you are not into looking at stock prices and trends and patterns in an attempt to improve your entry and exit points on stock investments, this video is definitely not for you. Go check something else out. If you have watched our technical analysis overview video, then you're going to see a lot of the things that I mentioned in that video we're going to be putting to practice here. So you'll see RSI, moving averages, support and resistance points, trend lines. I'll be looking at a chart in real time, commenting based on what I see, and hopefully helping you to go out and do the same thing. Hope you enjoy. Let's take a look at this stock chart and see what we can learn. So first, I want to zoom in so you can see some of the data we get from these OHLC bars. A red bar indicates a down day, a black bar indicates a positive day, and what we're getting here are a few different data points. First, the tick on the left side of the line is the open, tick on the right side is the close, and the high and low for the day are indicated with the top and bottom of each line. So we can see, is a stock moving down during the trading session, and we can also see the next day, did that stock open up lower or higher? And if you see my cursor on the screen, in this particular trading day, the stock closed here, it opened the next day slightly below the previous day's closing price. All right, so if you're looking day to day, this can be useful for you. Oftentimes with our portfolio, we're thinking more intermediate term trends, so I'm going to zoom out and show you some of the things that I see that are interesting on this chart. First of all, I'm noticing some support and resistance that could play a key role in our trading here. We have support coming in right at this level, and I see that support being tested. So first it's tested here, the stock bounces nicely off of that. We come down, we test support again, we see another bounce. Support gets tested a third time in a short trading range here, and we then see a bounce, come down, test it a fourth, stock bounces yet again, and this fifth time that we test the support is broken. If you see the importance of identifying your support lines, once support is broken, that stock makes a meaningful move lower. Let's look at resistance. So resistance on the upside indicates a price point that the stock is having a tough time breaking through. I see a strong resistance there and another weaker resistance in this range. So what we're starting to define here is a trading range, and the stock is in a trend right now of trading between these points. Same thing on the resistance side. We come up and we test this weaker resistance a couple of times and we see it broken, but we don't get through the stronger resistance point. It then comes down to test support, bounces up towards the resistance, down again to support, and continues this pattern. When you can identify a trend like this is useful because it tells you what you're dealing with in the intermediate term. We're in a trading range here where if you look previously, prior to these points, we had more of an upward trading channel, and this is about a month prior. So about a month we're trading in a decisive upward trend, and then we move into this pattern. Let's look at the moving averages, see if we can learn a bit more about what's going on here. So in blue we have the 50-day moving average, and in red we have a 200-day. I'm going to zoom out a bit more to see what we can learn. And when a stock price breaks above the 200-day moving average, we think of this line as a strong support. In this case, the stock broke to the upside, and you can see it's been above that 200-day for quite some time. Only recently did it drop below that 200-day moving average. We like to use a 50-day overlay on top of that. So we have in blue our 50-day moving average, and this is going to be more reactive to stock prices. So if you notice when the stock pops above the 200-day, the 50 is quicker to catch up to that stock price. This also functions as a support line. It's a weaker support than the 200-day. We have a couple times along this trend where the stock comes down, breaks the 50, and then continues in its upward trend. One nice piece here that we can learn is where I had previously shown you the trading cycle we were in, that support and resistance pattern of just testing the upside, testing support, and repeating. The 50-day is continuously broken, and then the stock price recovers. Broken, recovery again. So that's another way to confirm, okay, we're clearly in a trading pattern right now. Another indicator that we like to use to confirm support and resistance points is RSI. So just to tell you what we're looking at here, this dashed line in the middle indicates an RSI of 50. The solid line above it is 70, and the solid line below is an RSI of 30. If you see a stock touching this line of 30, then we would look at that as an oversold condition. RSIs above 70 indicate overbought conditions. So if we look at how this stock was behaving, when it was testing that hard resistance point, the stock moved into overbought territory. If we see this unfolding in real time, we know that the likelihood of the stock being able to continue to move higher is diminishing. So as expected, we see the stock cool off a bit. Sometimes for RSI to calm down, we'll see a drop lower like we've seen here. Other times we can see a bit of consolidation in the stock price. So trading sessions will go by and the stock seems to be moving sideways or in a trading pattern to let RSI recover so that it can then make its next push upward. Here's a situation where RSI dropped below 30. It indicated we were in oversold territory, and it did correspond to a nice intermediate term bottom in this stock. We saw a bit of a rally up. That gave us the consolidation back towards 50, and then we do see the stock come over and set some new lows here, and RSI holds up a bit better just above what we would call oversold territory. So I've added Bollinger Bands on top of this. Bollinger Bands will expand wide around the stock price or pinch narrow, is they tell us how much volatility we may be able to expect in the near future. As these bands pinch together closely, they indicate there's a higher likelihood of some volatile sessions ahead. And if you can see in this example, the bands are pinched, and then we see the stock make a move. That move included breaking through both the 50 and 200-day moving averages. When Bollinger Bands are wide, it's often indicative of a trend that is unfolding, and then they'll narrow in, and over this period they've stayed narrow, and then when they get particularly pinched together like this, indicates we might be set for another trend. And here we start a nice trend upward. So Bollinger Bands are just another overlay. You can use this tool along with moving averages, along with your support and resistance points, and it works well with RSI. All these tools come together to try to increase the probability of a good entry point, a good exit point, and to help us understand what we're dealing with at any point in time. And here, just to show you another chart and go through some of the same commentary, we're not naming the stocks we're viewing here, because we're really trying to make this educational about how to view a stock chart and how to get your own takeaways. So on this stock, we see some different patterns. First of all, we have a clear upward trend, a strong trend that's pretty easy to identify right there. No meaningful support and resistance points are set looking at it with this time frame. So we see some, and I'll put trend lines on here, we see some support show up over the shorter term. See another level of support in this range, or you could argue that the stronger support might be even down here. So it really depends on what type of time frame you're interested in, but I'm going to leave those here and zoom out so you can see what looks to be some support points that could be key over this time frame. When we widen that out, they don't hold that well, so support ends up being tested later, and it shows that these support points that were set during an upward trend were not as meaningful when the stock moved into a downward trend. So again, key to identify, are we in an up cycle, are we in a downward cycle, or are we in a trading range? And you can't always pull support and resistance points from one cycle and use them in the next. Let's get rid of these short-term ones we've identified and look at this now with a wider time frame. Okay, so what we do have here are some pretty interesting overbought conditions and some oversold. So let's take a look at RSI and what RSI can tell us about this particular stock. We get a strong upward move. If you follow the cursor above, you're going to see that RSI was showing overbought. The stock still pushed to higher levels. Finally, it seems to be too much. There was too much optimism, and we see a drop here, which allows RSI to cool off. We're then able to make a rebound without triggering overbought conditions. We see a sharp drop, which if you look above, that gets our RSI back to 30 and really sets this stock up for another leg higher. Over that trend upward here, RSI was tested a number of times, and while in the short term the stock gave up some gains, each time it was able to recover to new highs. So here's an example where RSI is continuously tested and the stock is still able to move higher. Moving averages tell us a bit more on this. So the 50-day stayed in support of this upward trend. It was tested a couple times, but it held up. And then finally, once that 50-day is broken, we get a move back towards the 200-day. Let's add Bollinger Bands to just see if we have anything interesting going on here. Okay, so with a stock with this type of moves, plenty of situations where the bands are expanding wide over a trend and then pinching narrow to indicate we could have some more volatility ahead. We get another move. Keep in mind, Bollinger Bands do not indicate direction. They're only indicating low volatility or high volatility in the future. So we've looked at two different stocks. We looked at their charts. As I've zoomed in and out, you can see the different support and resistance points, the moving averages. You can see how RSI weaves into that picture to tell us more about it. These are just different tools to use. Identify the time frame that you're interested in, and then begin to use these tools to get used to this, where you can just look at charts and start making comments on the fly. It's going to take experience. So you start looking at charts, look at them in broad markets that are increasing. Look at those same stocks when the markets are decreasing. Look at stocks when the market's in a trading cycle itself, and then you'll see which stocks had breakouts away from the broader markets, which ones were following the trend. It's just going to take quantity here, experience, look at a number of stocks in a number of market environments, and you'll begin to have meaningful takeaways that increase your probability of success. All right, we hope you found this helpful. Thank you.